studying your last two. I swim med when they turned in. The styrene down to mute. And can learn the pole that sunk he died.
Let's move from theory to practice by following a simple example using professional tax software. Suppose a corporation has earned $10,000 of investment income during the year. This income could be interest from a bank account, rental income from an investment property, or another type of passive investment income. The first step is not to calculate the tax manually. Instead, the tax preparer opens the corporate tax software and enters the corporation's financial information. In this example, the investment income field is completed with $10,000. Once the income has been entered correctly, the tax preparer simply instructs the software to begin the calculation. From this point onward, the software performs the complex tax calculations automatically. It applies the corporate tax rules, determines how the investment income should be taxed, calculates the corporation's tax payable, and updates all the necessary tax schedules and accounts. Notice the important distinction here. The tax preparer's responsibility is to enter complete and accurate information into the software. The software's responsibility is to apply the tax legislation and perform the mathematical calculations. This is how professional tax preparation is performed in practice. Modern tax software has been designed to handle the detailed calculations required under Canadian corporate tax law. However, that does not mean the tax preparer can simply accept every number without understanding it. A knowledgeable tax preparer understands what information is being entered, why it is being entered, and how the software will process that information. This understanding makes it much easier to identify errors, explain the results to clients, and verify that the calculations are reasonable. In the next slide, we'll follow what happens after the $10,000 has been entered. We'll watch the software process the information, calculate the corporate tax, identify the refundable portion, and update the corporation's refundable tax accounts. So, the key takeaway from this slide is simple. Every corporate tax calculation begins with accurate data entry. Once the investment income is entered correctly, the tax software applies the corporate tax rules automatically, producing the calculations that form the basis of the corporation's tax return. Understanding this workflow is an essential skill for every Canadian tax preparer. Now that the investment income has been entered into the software, let's see what happens behind the scenes. In our example, the corporation has entered $10,000 of investment income. Once the calculation begins, the software automatically applies the corporate tax rules contained in the Income Tax Act. This is one of the biggest advantages of professional tax software. It knows which tax rates apply, how investment income is treated, and how each amount should flow through the corporate tax return. The software first calculates the corporation's total corporate tax based on the investment income entered. Once the total tax has been determined, the software doesn't stop there. It automatically separates that tax into two components. The first component is the regular corporate tax, which represents the amount payable to the government. The second component is the refundable portion of the tax. This amount is identified by the software and is automatically recorded in the corporation's Refundable Dividend Tax on Hand, or RDTOH, account. At the same time, the software updates the corporation's T2 corporate income tax return. The appropriate schedules, tax accounts, and supporting calculations are all updated automatically, ensuring that the tax return reflects the correct treatment of the investment income. Notice how little manual calculation is required. The tax preparer doesn't calculate the refundable portion with a calculator or manually transfer amounts between tax accounts. Instead, The software performs those calculations automatically based on the information entered. However, understanding the flow remains extremely important. As a tax preparer, you should always be able to explain what the software has done. A simple way to remember the process is: investment income goes into the software. The software applies the tax rules. Corporate tax is calculated. The tax is divided into regular tax and refundable tax. The refundable portion is added to the RDTOH account. Finally, the corporate tax return is updated. If you understand this sequence, you'll be able to review the software's output with confidence instead of simply accepting the numbers without understanding them. The key takeaway from this example is that professional tax software performs the calculations automatically, but a skilled tax preparer understands the path the numbers follow. Knowing how investment income flows through the software, how the refundable portion is identified, and how the RDTOH account is updated is essential for preparing accurate Canadian corporate tax returns and confidently explaining the results to clients. Let's review the complete journey of our $10,000 investment income example and understand what the final tax results actually tell us. We started with a corporation that earned $10,000 of investment income. After that income was entered into the tax software, the software automatically applied the Canadian corporate tax rules and calculated the corporation's tax payable. But the calculation doesn't end with a single tax number. The software produces several important results, each serving a different purpose. First, it confirms the investment income that was entered. Next, it calculates the corporation's total corporate tax payable on that investment income. The software then identifies the refundable portion of the tax. This is the amount that qualifies to be tracked in the corporation's Refundable Dividend Tax on Hand, or RDTOH, account. Once that amount has been identified, the software automatically updates the corporation's RDTOH balance. This refundable tax is now available for possible recovery in the future if the corporation pays taxable dividends to its shareholders. After accounting for the corporate tax, the software also determines the corporation's after-tax earnings. These are the funds that remain inside the corporation after the current year's tax has been paid. At this point, the corporation has an important decision to make. It may choose to retain these after-tax earnings for future investment or business purposes, or it may decide to distribute some of those earnings to its shareholders as taxable dividends. If taxable dividends are paid, the corporation may then become eligible for a dividend refund, allowing it to recover part of the refundable tax that had accumulated in the RDTOH account. Notice how every number produced by the software tells part of a larger story. The investment income starts the process. Corporate tax is calculated. The refundable portion is identified. The RDTOH account is updated. After-tax earnings remain in the corporation. And finally, a future dividend may trigger a dividend refund. As a tax preparer, your role extends beyond simply reading the numbers on the screen. You should be able to explain how those numbers were created, where they came from, and what they mean for the corporation going forward. That is why understanding the overall flow is so important. Professional tax software performs the calculations automatically, but it is your understanding of the process that allows you to review the results, identify unusual situations, answer client questions, and ensure that the corporate tax return has been prepared correctly. The key takeaway from this example is simple. Investment income does not stop with a tax calculation. It creates a complete chain of events from taxable income, to corporate tax, to refundable tax, to the RDTOH account, and eventually to a possible dividend refund. Understanding this complete flow is what transforms tax software from a calculation tool into a meaningful source of tax planning information.